What's up, everyone? I'm Nick Campo. This is
Big Boss Ben.
and we are the
Lone Guys Podcast.
Thank you for tuning in. We're coming to you live from the Campo Media Group studio. We are a production of NBI Financial Group LLC. If you haven't done it yet, go ahead and bang that red subscribe button and turn on your notifications. Oh, and just so you know, we're giving away $1,000. All you have to do is subscribe, turn on notifications, and comment on our videos. And after the comment, leave your Instagram handle. And don't forget, it can't be like great video. It has to be something that has actually a thought on what it is we're talking about. And while you're at it, go to all of our every social media channel you can possibly imagine. We're NBI Financial Group LLC on all of them. Ben, what do you got for us today?
So, got a question for everyone. What is 5.25% of 31 trillion?
I don't know. What?
$1.6 trillion. To be exact, 1.627 trillion.
What is that?
That is the amount of interest that the U.S. government pays each year.
How much is it?
1.627 trillion.
So we pay $1.627 trillion in just interest on our national debt every single
Right now. Oh, but wait until that credit limit goes up.
You think
It's going to have to? Oh, it has to.
They set a hard date, and the hard date is June.
Well, that date has moved several times. At first, it was middle of July. Then, middle of June. Now they're saying June 1st for that. That means spending's increasing. How's it coming earlier? Because they are hitting that number. They are racking up more debt quicker than what was initially expected.
It's absolutely wild.
In the face of hitting that debt limit.
You know what I think about every time I think about the debt ceiling?
What?
How hot Janet Yellen is.
That's right.
Man. that debt limit. I mean, come on now.
It's your crush.
Oh, she's a huge crush of mine. Yeah, it's just, it's absolutely ridiculous. It's putting the American people in a bad spot. It's putting the working class for sure in a tough situation, because who do you think is paying back all that debt?
Exactly.
Get ready for your taxes to go up when it comes time to actually start paying some of this debt down.
No kidding. And you see all these things coming out from the White House, from Janet Yellen. White House released something else today about how, you're about to lose 8 million jobs. Stock market's about to collapse if we can't raise the debt limit. That is all political pressure. And that's what drives me crazy. And we went over Janet Yellen's comments last week. They are trying to scare the American people for their own political gains, because the negotiation, who cares about we need to work on balancing the budget. We have to have a plan in place to balance the budget, to move forward so this doesn't keep happening. We can't just raise the debt limit, because guess what? 1.6 trillion. What is that doing to inflation as well? We're raising interest rates another quarter. Was yesterday?
Terrible idea.
Right. Another quarter. They're talking about another quarter in June, another quarter in July. I mean, at this point, part of the reason they're raising it is to keep up with the excess government spending. And a lot of that's, interest. You have to have a plan in place to get it. Yes, right now it has to be extended. We don't have enough time, but you have to have a plan in place moving forward. There has to be some gains.
They're not going to make a plan.
No, they're not. It's a game of chicken of, what are we going to do? One side saying no cuts, one side saying we're going to drop what the other party wants to do. It's the fatal flaw of a two-party system. And it's putting who's at risk? It's you and me, all the American
working class,
everyday American people.
It's the working class American that's at risk. It's the working class American that they say they care so much about. We have to do this for you, but it's not for us. How about this? Stop fighting proxy wars. That will bring our budget down a little bit, right?
Yes.
Still have a strong military. We can have a strong military, but be, America first.
Right.
And I know that's a controversial statement to a lot of people. What I mean by America first is worry about our country here. Instead of sending trillions of dollars to Ukraine or overseas or Iran, they sent billions of dollars, I think it was, for gender studies. How about this? Let's go fix Chicago. Let's go fix Detroit. Let's fix New York City, Atlanta, Los Angeles. Let's look at maybe resolving the issues on our streets, right, instead of everybody else's street. So that would definitely probably bring the budget down as well. Number two, to me, is, hey, let's have an actual budget. Let's look at line item by line item by line item. Rand Paul does a very good job of this. Every year around Christmas, he releases basically all the overspending of the U.S. government. He goes through the budget line by line and says, okay, we're spending money here. We're spending money there. We just built an Obama reading center. Whether you believe he was a great president or not, why are we spending government money to build a building and name it after the president. Like, it just doesn't make any sense. Like,
It's ridiculous.
We don't have to do that. We have libraries, public libraries, that we can use to teach people to read. Why do we have to have another building and spend millions and millions and millions of dollars on another building? So we're looking at the budget, and then you have Jerome Powell, who's like, oh man, spending's too high. Well, I guess he hasn't been looking at manufacturing numbers. He hasn't been looking at retail numbers. I guess he hasn't been looking really at any numbers. And he keeps talking about inflation, but he doesn't realize the housing numbers are lagging. And I got really curious. We asked a question about this the other week on a couple weeks ago on our podcast. And the question was, is he doing this on purpose or is he just dumb? And the answer to that question is neither. He's a lawyer. You know what I mean by that?
Yeah.
He's an actual lawyer. He's not an economist. How is a lawyer in charge of the Fed? How's a lawyer the Fed chair? I don't understand, but it makes a lot of sense. Because one thing I know about lawyers is they lie, they squirm, they throw people under the bus. They aren't afraid to hurt people. You know, let's just look at defense attorneys, for example. Defense attorneys are either representing a criminal or representing somebody who's innocent, right? If the criminal has enough money, they're going to do whatever they can to get him off. If the innocent person is poor, they're just going to cut a plea deal and say, hey, serve your time. It'll be fine. You'll get out soon, even though that affects them for the rest of their life. So lawyers are used to just doing whatever benefits them. So what benefits Jerome Powell in this instance is, let's hike the interest rates, because that way we can quell government spending. Who cares if it hurts the American working class people? Who cares if it is going too far? Who cares if the housing numbers are lagging?
Right.
And May 10th, we will find this out. And inflation's actually down. Who cares?
We will.
Who cares, right? That's Jerome Powell, but he is a lawyer. How a lawyer is the head of the Fed chair? Can you explain that to me? And it's not an economist. Can you please explain that to me?
No, I can't. I mean, I don't even think anyone can. Well, I mean, they can't because it's politics. That's the reason why. But it's it's absolutely ridiculous. Like the entire excess savings for the American people right now is $900 million. $900 million. Right now, our government is racking up $1.6 trillion in interest each year. Like, how does that make any sense?
Tell me this.
How and you're looking at, how are we going to solve inflation? How are we going to do this and that? Not necessarily by jacking up interest rates.
No, that's not.
I mean, at this point, no. Like, I mean, we have ceiling. It's coming down month after month. Anyone who follows the economy at all and has a basic understanding of it knows that there is something called shelter inflation. You look at rent prices. I mean, when do you, if you're out there renting, when do you renew your lease? Every 1 year, every 2 years, every 3 years. Those numbers lag behind. You look at when you buy a car. When do you do for that? Every 3 or 5 years? You're doing financing. You're looking at buying a car.
Not me. Not me. I'm trying to build wealth through real estate. I'm buying a used junker, a beater upper. I'm trying to save my money. If I'm trying to buy a car every 3 to 5 years, can you do these numbers for me? Do $800. I think it's $750 is the average car payment here in America right now. Do 750 times 30 years, 360. So we'll say that, just play that out. How much money is that? And that's if the car prices don't go up. How much money is that?
$270,000.
So you just spent $270,000 on your car over your lifetime because you wanted to carry a car payment. Why? To look cool? Oh, well, my car keeps breaking down. Well, what's more expensive? Paying $1,000 one time a year for, say, repairs, or paying $750 a month? That was logic since I was a kid that never made sense to me. And in my community, a lot of people, they would always have, their cars were nicer than their houses.
Yeah.
And I said, there's something wrong here. Like, listen, dude, I get it. You got those deuces, those 22s, and those rims cost you $4,000. But you're living in Section 8 housing.
Right.
Like, take that $4,000, put it as down payment on the property, and you could have purchased the property. Or, I'm glad you said that house thing because I know this is a little bit, or the car thing because it's a little bit every 3 to 5 years. People do that. That's what they're doing.
Majority of people do that. I mean, it really does, in fact, impact the inflation numbers because most people do that. But I mean, you make a good point. Like, why?
Why? Oh, I don't have enough money. I'm living paycheck to paycheck. Well, maybe get rid of the car that's costing you $750 a month. Downgrade. Get a car that you can either pay cash for or pay it off quickly. And then that excess money, $750, that's now in your bank account.
Right.
That's now in your bank account. If you want to buy a house, primary residence, which we say buy a primary residence, definitely buy a primary residence, buy it first. Go ahead, put that $750 aside. What's $750 times 24 months? Give me that number. Because I bet you after 24 months, you'll have enough money to do a 3 to a 3.5% down payment if you're a first-time home buyer, or have enough to cover your closing costs and do a down payment assistance program and actually own the house and build equity in that primary residence.
$18,000.
$18,000 is more than enough.
Oh, yeah.
It's more than enough to buy a house. Listen, and then I'll get comments on TikTok about how I don't know what I'm talking about and this, that, and the other thing. Someone actually mentioned something on TikTok, and you brought up, we know what the excess savings is in America, correct?
Correct.
Somebody on TikTok said, and I responded to this comment, how scary is it that the United States government and these census companies and these data tracking companies can know how much money we have as an American people? Why?
Oh, well, that's not even the government. That's Chase.
Right. Why
it's the big businesses that have all that information.
Why are they giving this information, though, out? Like, how scary is that they know? I don't want people knowing my personal information. I don't want them knowing how much money is in my bank account. I mean, do you?
No. I mean,
Donovan, do you want them to know? No. No one that's personal information. Why are you giving that out? Now, I do believe we have to have a conversation about financial literacy and so on and so forth, and talk about money and talk about what different careers make and how you can save money and how you can put money towards real estate. And, $18,000 after 24 months, if you get rid of your car, that's definitely enough for a down payment on an investment property if you already have a primary residence, is it not?
Yes, it is.
So, I mean, hey, but I'm living paycheck to paycheck. I'm living paycheck to paycheck. We don't make enough money in America. We don't do this. No, we have a spending problem in America. The government has a spending problem. 3 out of 5 Americans don't have a budget. That's a problem. I've even had a spending problem at times and in the past. The thing is you have to grow up and be an adult. So if you really want to do something and have financial literacy or financial success, you have to, one, be an adult. Mm-hmm. And what I mean by that is it's children who are going through stores. I want that squirt gun. I want that toy. I want this, right? That's a childish act. That's something that before we learn discipline, that's something we do. Discipline is freedom, folks. And part of discipline is a budget, a financial plan, having a goal, developing a budget, which is going to be your pathway to achieve that goal, and following it no matter what. Oh, your friends are going out to the bar on Friday night. You spend $100 at the bar on Friday night with your buddies when you're in your 20s. I mean, there's a lot of people who did that. A lot of people would go out. They would spend $100 on drinks and appetizers, food, dinner, whatever it was. $100 on a Friday night. We did it. Yeah, right. $100 a week. That's $400 a month. Can you do what $400 a month times 24 months is? That's $9,000, right? Just around $8,500. You would have $8,500 in your savings account. $9,600. So almost $10,000. You do that for 4 years. That doubles. You take that money, you put it into your 401k instead of putting it into.
I was about to say, yeah,
like that.
You do something with that money. You put it into real estate. Put it into, anything.
You want to know what the problem with this conversation is, and why a lot of people give us a lot of pushback, especially on TikTok?
Why?
Because it makes them feel self-conscious.
Because everyone knows they can do it.
Well, and they know. So when you speak the truth to people, and they hear the truth, and they know that it's something that they're doing that they shouldn't be doing, because everybody knows it, they get defensive. That's the first step. It's like an alcoholic. The first thing they do is they get defensive when you call them out about being an alcoholic, or you have that an intervention with them. But then, if you look at 12 steps, what's the first thing you have to do in the 12-step program? You have to admit there's a problem. We as a country need to admit that there is a spending problem. We as an individual have to admit that we have a spending problem. We as an individual have to admit, hey, I know I can learn a skill and make more money if I'm not making enough.
Yep.
But I just don't want to do it. But nobody wants to do it. There's a price for success. The price is hard work. Whatever your definition of success is, hard work. You don't get it without hard work. Pay the price and you will have success. I promise you. And the great thing about this country still is we all have unlimited opportunity to do that. So, all right, Ben, let's get back on topic. I'm sorry. You mentioned that car payment thing, and then all these freaking TikTok messages started. It's like when people are about to die, you see your life flash before your eyes, they say. I
Right.
saw, when you mentioned the car payment, I saw TikTok flash before my eyes.
No, but I mean, what you said is perfect sense. That is what people need to look at doing because it can make a massive difference in your finances. Because the thing about that too, and I just want to add to what you were saying, like things move exponentially. Like you have to have money to make money. Like there's a reason people say that, but you have to start somewhere. You have to start. And the way you can do that is by making a budget, looking at your expenses. I guarantee every single person has at least some room that they can make gains. Have the discipline to do that and do it consistently over a period of time. And then, I mean, for example, you talked about $400 a month. After 2 years, that's $9,600. At that point, you're able to do something. You're able to make that $9,600 into something else.
Primary residence.
Right. You can buy a home with it.
Residence.
Right. And then all of a sudden you turn that 9,600, you get like a qualified work with a mortgage professional, find like a down payment assistance program, or
There's
I mean, you
your
don't even
costs,
need
get
to
seller
like
credit, like whatever you
right.
need to
There's
do. You got
3% down first time
like,
home buyer
and guess what?
programs. All of a sudden, then you have then you can turn that into a $250,000, $300,000 property that starts appreciating over time.
Right. And in York County, on a $300,000 or $350,000 property, you're gaining almost $150,000 in equity over a 3-year period. Core logic numbers, folks. You can't argue those.
No, and it's all through just discipline, having a budget, and just knowing where your money is going. Like,
and I can tell you this: if you want to talk about discipline, having a budget, and making sure spending doesn't go where it doesn't need to go, do not have a lawyer run your finances for you. Like the Fed chair has Jerome Powell, a lawyer running America's finances for us. It's a big problem.
Right.
Talk to a professional who actually understands finances and financials and that type of thing. So let's keep going.
Right. So anyways, getting back into the actual inflation numbers, because like those car loans, I mean, people still do that. It's 3 to 5 years, meaning those numbers are delayed, meaning they're going to keep coming down and down. They're still inflated. They're still showing inflated numbers because guess what? Inflation did occur from your lease 2 years ago till now. Mm-hmm. Like that's a pretty big jump. That is artificially hiking the inflation numbers. That's not showing the gains over the last 6 months, the improvement and the balancing out of the inflation over the last 6 months. So the inflation is there. So why they have to keep raising it drives me crazy. And the other piece of it too, because I mean, this is another concern. I don't know if you saw, The Big Short.
Mm-hmm. I love that movie.
That guy, Michael Burry.
Yeah.
So he came out, this was about a month or so ago. He is saying that we are at risk right now for potentially a bigger issue than 2008, than like a depression. And the reason for that, it's because of the Fed keep increasing the rates like they are, to the point that it's going to push us into a recession that's extreme enough that they're going to lower rates down way lower than they should. They're going to keep over exaggerating on every side of it. And once those rates go back lower, we're going to hit inflation again. We are not going to hit it. And that's at that point, that's when it can become a serious issue.
Well, it's also not having free markets, right?
Exactly.
So they've manipulated the markets. The markets aren't free.
Instead of letting it dictate and say, okay, inflation's on the right side of things, let's ease it up. I mean,
they shouldn't be doing that, period.
Right.
That it shouldn't be happening. Like, you should allow the markets to be free. Like, we should not be doing this quantitative easing. Like, I'm sorry, I just don't agree with it. That's probably a controversial take for anybody who understands finance. Oh, well, we have to quantitative ease, or else we'll have a Great Depression, or else we'll have this. But what happened after the Great Depression? One of the biggest booms in American history.
Right.
So you have to have the bad times to have the good. The sun doesn't feel so good if it wasn't for rain.
Right.
Right. I mean,
right.
It's a rap song.
No, I mean, you're 100% right. It's just, it's all the artificial adjusting and everything. It's ridiculous.
It's brutal.
And then you look on the other side too. And I mean, we mentioned this on the policy side, looking at the government with this debt ceiling coming up June 1st, less than a month away. They're playing a game of chicken with the U.S. economy on the line. Instead of saying, hey, this is an issue that needs to be fixed, there is no accountability by anyone, by any politician. You have one person saying, oh, let's go back to the gold standard. Let's do all these changes that are never going to happen. I don't even remember who it is.
Why are you saying that's never going to happen?
I mean, at this point, there's not enough gold. to balance it out. I mean, you would basically have to collapse the dollar to the point that it would be able to get to that. I mean, and that's maybe the direction we're going, but like right now, I mean, there's not nearly enough. It's not going to be, it's just not feasible.
When was the last time we did a audit on our gold reserves?
Oh, I mean, that's probably been years ago.
70s, I think.
Yeah.
So I don't know if the United States even holds any gold. Like Fort Knox is empty, folks.
Maybe not. Maybe not, but I mean,
I think we could go back to the gold standard. I think it would cause a little bit of pain, but I think the long term,
it's ridiculous. But
how much better it would be for the country, it's wild.
I mean, my thought, and I try to stay away from politics as much as I can, but at the same time, like, you're never going to, I don't care what the Fed does, you're never going to get rid of inflation when the government is spending as much as it is.
Right.
You're just not.
I'm with you.
Like, it's something that has to be fixed. We have to get rid of the bipartisan party system. We have to have term limits. We have to be able to get new people in there, people who actually are going to be in there to make a difference, not become career politicians.
That's one of the things too. There's a big list of things we have to do, and the way to attack and we've started a business. We know this.
Right.
When you start a business, there's a lot of work to be done on a lot of different things to make that business successful. And the number one way to make sure all of it gets done is just go in order. Do one thing at a time. Do one thing at a time. And then your list grows, but it's growing in a positive direction. Be 1 inch better today than you were yesterday. 1% better today, 1% better today, 1% better today. And if you can do that, it's called the compounding effect.
Yes.
But we have to do that with our country too. But we have to, but I don't think it even starts at changing things. It starts at education. People have to be educated on what's actually going on, and they have to care enough to look and do some research. They have to be educated on financial literacy, but they have to care enough to do it.
Right.
And that's hard work, and people don't like hard work. Humans, it's part of our nature to try to gravitate towards comfort, but the ones that are the most successful throughout the history of the United States are the ones who gravitate away from comfort because they're uncomfortable being comfortable.
Right. And you look at the media too and what they're doing right now, and we brought this up earlier, like it's made to scare people so that they don't look into it, so that all they see are these headlines. The White House made a release about potentially 8 million jobs being lost because of not, and essentially they're blaming the other party, saying, it's because they're wanting all these stipulations about cutting all these things that will go to you, the people. No, it's to balance the spending.
We are going to,
and I'm not picking one side or the other. I mean, you have to cut spending. You have to balance the budget, or else if you pay 1.6 trillion, I mean, that was eye opening to me.
I don't think you can pick one side or the other because they both like to spend.
I mean, correct. At the end of the day, I mean, I don't care what happens. You have to balance the budget. You have to reduce spending because 1 trillion in interest is never going to resolve anything. And I mean, some people were proposing 50 trillion.
No, that's what Janet Yellen wants to go to, is 50 trillion. She said that in a congressional hearing.
That's insane.
Well, she's hot, so the hot girls get all the money.
There you go.
All right, Ben. Do you have anything to tell the people? Let's move on to the next subject.
Hold on. Let me just do.
What? Do what?
50 trillion. Yep, that's 2.6 trillion.
$2.6 trillion a year in just interest payments. You want to know what's funny? Let me ask you a question. Are we going to talk about the U.S. dollar and the collapse of the U.S. dollar at all in this episode?
We can do that. But first, we want to remind you to subscribe to this video, hit that like button, make sure to ring the notification bell so you can follow us. Our goal here is to build a community. We keep talking about this. I mean, we have our own thoughts and ideas. We do want to hear from you. Please leave a comment. Let us know what you think. Have an open discussion. I mean, at the end of the day, our big goal is to just have that conversation with everyone. Have people think. Have people actually make their own opinions, do their own research. That is what we want out of our community. So please like that video. Leave a comment. Yeah.
Bang that red subscribe button.
Right.
Bang that red subscribe button. And we're giving away $1,000. What? Yes, we're giving away either $1,000 in cash or $1,000 in Bitcoin. It's your choice. All you have to do is go to our YouTube page, NBI Financial Group, and bang the red subscribe button, turn on your notifications, and leave a comment on our video. After the comment, put your Instagram handle. It can't just be some boring comment like great video. It needs to actually be a thought out response. Every one of our videos that you comment on, if you're subscribed and you leave your Instagram handle, you will get a new entry to win $1,000. We're giving that $1,000 away on September 1st, which is perfect since we're in a recession. It will help you be able to spend that money during football season. So go ahead and bang the red subscribe button, turn on notifications, leave a comment, a thought-out response with your Instagram handle, and you'll be entered to win either $1,000 in cash or Bitcoin. Boom. All right, Ben, what do we got?
You had some thoughts about the dollar.
Yeah, so we discussed, and I actually think I was wrong.
Okay.
I don't think that the U.S. dollar is ever going to lose its peg as the world reserve currency, at least not anytime soon.
Yes.
So, which I didn't think it would either. I thought it would be a slow collapse. If you look at the BRICS nations, Brazil, Russia, India, China, Saudi Arabia, right?
Right.
So you look at BRICS, and they're trying to trade in a different currency. One of the things that people are very uneducated on is gross domestic product. So everybody who's watching this, if you don't know what GDP is, look it up. If you look at just Texas and California, you put those two together, the GDP in just those two states is a bigger number than all of those countries combined except China. The other piece is I think Texas's GDP is bigger than Brazil. Brazil's a failed country. Sorry to all my Brazilian people out there. It's not you, the people. It's your terrible government. It's a failed country. So what I'm getting at is, and I wanted to correct something that it's not even correcting of an opinion. I didn't think that the U.S. dollar would be pegged or taken off as the world reserve currency.
Yep.
I think it's bad what we did with it, weaponizing it. I think it's bad that these other countries, but I understand why they're doing it and creating BRICS. But the problem is when your gross domestic product is what the United States is, you have to trade with us.
Yes.
Every country has to trade for us. Do you think the United States is not going to trade in the U.S. dollar?
No.
So as long as our GDP stays where it is, it's going to be hard to replace the U.S. dollar as a world reserve currency. But I think the number one threat to that is the increasing of the budget and getting more and more into debt. I think that's more of a threat than what the Biden administration did with the Russian reserves. I think that was bad, but I think that the debt is that. But anyways, that's all I had to say on the U.S. dollar.
The debt has to, I agree with that. And I mean, it all kind of interacts together. I mean, we've talked about this before. Like with the economy, like it's all interrelated. Everything follows the other piece. Like you have, like it's a community. You have, and we've mentioned this before about like rent prices and rent control and things like that. But you have one building that starts to become dilapidated. People aren't going to want to be near it. They move away. That starts to affect businesses. So even if it's not directly correlated, eventually it's all going to kind of tie hand in hand.
Right.
So something like the debt ceiling, I mean, could have a massive impact on the dollar.
Absolutely. So what was our next topic?
So the next topic I want to get into is...
You don't remember?
No, I do.
Are you kidding me? Obviously you don't.
No, I do. So we lost another bank the other day.
Nice.
So, and this kind of ties in well with communities. First Republic.
Oh, no.
First Republic Bank collapsed. San Francisco Bank.
What is it with all the West Coast banks collapsing? Do you think it has something to do where they invested into a bunch of green energy products and companies, and they invested their money based off of emotional feeling and not what's actually making money?
Right. So, and you're seeing a lot of negative news about the Fed raising rates after this, and that's creating a lot of fear mongering. Right. A lot of people saying, "Oh, look at what it's doing. Look at how it's going to have a drastic impact right away."
Well, the Fed did cause these bank collapses.
They did because they did.
They hiked the rates way too fast.
Right. Oh, 100%. Exactly. It's way too fast. But you look at it too. Where were all these? And you mentioned earlier, where were all of these located? This is another bank that is located in Silicon Valley area, and you have to look at it and looking at the reason for this is a little different too. It was defaults on jumbo mortgages was the biggest reason for this bank closing.
Really?
Yes.
Why do you think that is?
Well, let's look at it. HP moved out of there. Amazon
by Amazon.
Yeah, layoffs. Google is now selling their place, Google. Laying people off. Intel had a bunch of layoffs.
Boom, done. Okay.
I mean, there's
Tesla.
Tesla moved out of there.
Wait, hold on. So you're telling me businesses are leaving California?
And people can't find other people to buy their $4 million homes in that area.
Wait, hold on. From what I understood, and based on what I am told, California is so beautiful. California has the best weather. California is the most progressive state in the country. It's so great. Why would people want to leave California?
They are.
Do you think it has anything to do with basically a 50% tax rate if you live there?
Probably so.
Huh. Wait, hold on. You're telling me these big companies, the Joe Rogans of the world, these big time comedians, these big time actors, Mark Wahlberg, people who make a good bit of money, plus the businesses that make a good bit of money that provide high paying jobs. Let me repeat this again. Provide very high paying jobs to people, don't like paying 50% of their hard earned money to the government.
Right.
And then you have places like San Francisco that defund the police, and then the founder of Cash App gets stabbed in front of his ritzy community and killed. Like, people don't like that. Like, people want to feel like they're safe and that they don't have to pay a bunch of money. And my question is if you're defunding police and all these other programs, like, where's the money going? I think we should follow the money trail. But I don't want to get murdered, so. But anyways, but I keep going. So jumbo loans caused a collapse. You have a bunch of businesses that moved out of Silicon Valley, moved out of California. Maybe it has something to do with their policies. Maybe it has something to do with their tax rates. Maybe it has something to do with the rise in crime. That could all have an effect. A lot of them went to Texas too.
Right.
I thought Republican states were bad.
Right, but I mean that's kind of my point
I just thought
too.
They were. That's what everyone tells me.
Is that but you hear all this fear mongering about banks are collapsing. Like what are we as an economy? But you have to look at the communities that they're in because they are very localized, specialized banks. Like now, and the fact that there's been multiple of them,
diversification is key.
Absolutely. So you look at this area that's struggling. These people that had, jumbo loans in Silicon Valley probably were what, $4 or $5 million homes. Like that is that's hard to find that clientele when you have all these businesses moving out, when even the ones that are still there are, what is their business going to do down the road? Are they going to get laid off or their business going to move and they have to relocate? Why would you buy a $5 million home in that area?
Well, it's the same reason people always overspend is they think they're invincible and the times are never going to change and things are never going to get worse. So, the money's always going to keep coming. The money's going to always keep coming. And then the money stops coming, right? And then some of these foreclosures on the jumbo loans, maybe they were foreclosed on because they couldn't sell the property and they had already bought another property in the place that the business that they worked at moved to, right?
Right.
Because I have a hard time believing like mid-level managers who are the ones getting laid off were buying $5 million homes. But isn't California, everything's pretty much jumbo. A 3-bedroom, 2-bathroom, 1,800 square foot in Silicon Valley is probably $1 million.
Probably so, yeah.
So maybe it is a mid-level managers.
It very well could be, but you're probably right too on that piece of it. And maybe people are letting it go intentionally because they can't sell it.
Right.
But at the end of the day, that all goes back on the bank. But my point still stands. Like there are other things at factor, and the biggest thing that you can do that we all need to do is focus and look on our community. Like seriously. And you brought up the tax benefits. Like how are we going to, as a community, keep businesses there? Because at the end of the day, it's going to affect the everyday person. It's going to affect other businesses in that area. They all are interrelated.
I think you have to do it through new policy, and new policy is slow to come.
Right.
Because a lot of people are very, entrenched that a lot of people don't want to change a lot of people will just vote Democrat or Republican because that's what they've always been, instead of voting based off of who's the best for their local communities, right? And I think local community, it affects you more on your day-to-day life than federal.
Right, 100%, and it should.
But the other piece is a lot of the people who would vote the other way have moved because they couldn't stand those policies. So now you're going to be stuck in basically a one-party system, and that's never good. So the policy doesn't change. It just keeps going more and more and more and more off the deep end. Whether it's the right or the left, it gets very extreme, and it's not going to change because the people who disagreed, they couldn't change it, so they left.
Right.
And it's a sad state.
People will vote with their feet.
Yes. That's what. Yes, that's a great saying.
Yep.
That, and I think policy is very slow to change. And another thing too is like the Fed again. How does this relate back to housing? Jumbo loans caused First Republic's collapse. One of the biggest issues was increasing the interest rates as quickly as they did, or the overnight bank rate, the Fed funds rate, whatever you want to call it. They increased it way too quickly.
Right.
First, they kept it artificially low for too long, and then they increased it too quickly. And now many would argue that they're going too far the other way, which is going to cause another issue. Then they're going to have to come back down, and inflation's going to go up, and it's going to be a perpetual cycle that could collapse us. So, yeah, interesting. Another bank collapse. No way.
Exactly.
There's more coming.
Right. Oh, there definitely are more coming.
There's more coming.
There are 100% are more coming. But, yeah, and just the national media's coverage of it out there is just, I mean, there's so much fear-mongering. I keep going back to it, but there is. Like, and it's ridiculous because, I mean, I don't think we're on do you think we're on the verge of collapse?
As a country?
Yeah, as an economy.
I mean, if we collapse, the whole world collapses. So
right.
Define collapse. Like, do I think we're on the verge of collapse as a country or as an economy as a whole?
So people are claiming the stock market's going to drop by 60%.
It's already down 40.
They already said that we're going to lose 8 million jobs. I mean, and that's another misconception too.
I don't think so. No.
With the jobs report.
Well, I was watching Dave Ramsey the other day on YouTube, and one of the things he said is and he's old now. He's in his 60s, I think. Which to all the 60-year-olds, you guys are old. Every 10 years, there's something new that's going to be the end of the American economy, end of the American dollar, the end of the American dream, the end of this, the end of that, the end of this, the end of that. If it bleeds, it leads. Everyone's going to publish it. I actually am getting tired of talking about how bad the national media is. Of course it's bad. It's never telling you the truth, right?
Right.
If it bleeds, it leads. They just care about ratings. They don't care about the truth. So, no, I don't think we're on the bridge of an economic collapse. I think no. That's my answer. No. The United States is not going to have an economic collapse. We might have dips. We have peaks and valleys. Every economy does. It's cyclical. You go through, in and out of it, in and out of it. I do think we're still the strongest economy because we're the United States. Our GDP is biggest in the world. But I don't think we're on the verge of collapse. Now, is there a chance we could possibly collapse? Yeah, I think you're not safe forever.
Right.
You have to start making good decisions. And if we keep going down the road that we're going on with Jerome Powell and Janet Yellen and printing money and increasing debt ceiling and not having a balanced budget and not having this and we're going to be in trouble. At some point, let's pay that debt off.
Right.
Let's pay that debt off. It would be better for America. But no, I don't think we're on that edge of collapse. But I will say this. If you haven't done it already, go ahead and bang that red subscribe button. Turn on your notifications. That way you know every single time we post a video. Also, go to all of our social media channels, Facebook, Instagram, Twitter, LinkedIn, TikTok. We now have a Rumble, which we're going to get up and running. It started this week. Go to all of them. NBI Financial Group on all of them. Go ahead and follow it. Follow me. I'm Mortgage Man Nick on all the social media. This is Big Boss Ben. And you're going to see some good stuff coming out from our personals here soon. Oh, and we're giving away $1,000. So if you subscribe, turn on your notifications, and have a thoughtful comment and leave your Instagram handle behind it, we will enter you into a contest to where we will randomly draw a name, and you can either win $1,000 cash or Bitcoin. It'll be your choice. We're doing that giveaway on September 1st, but you have to be subscribed, notifications on, and you have to comment on our video. All right, Ben, what's the next topic?
So we don't have too much left to cover today, but do want to bring up, so the FHFA did release a statement out there last week.
That's what they're called.
No, but they just wanted to state it to address the discrepancies with the LLPAs, because a lot of people out there, and we've been hearing that on our end too, a lot of people are
LLPAs, loan level pricing adjustments.
Right. A lot of people out there are thinking that means, that people with lower credit scores are going to get charged less for their interest rate than higher. That is not what happened.
No. And do you want me to explain this a little bit? So every single day, I get phone calls. Hey, I got a 500 credit score and no money down. I heard I can get a good interest rate. Define good, right? Define good. No, that's not necessarily the case. The loan level pricing adjustment, what they did was they stopped giving as much of a benefit. They stopped giving as much of a benefit to somebody with 20% down and a high credit score. It doesn't mean they don't get a benefit or a positive pricing adjustment. They just get less of a positive pricing adjustment. And they stopped hitting the lower credit score with less down payment as hard. So they have less of a negative adjustment, but it's still a negative adjustment, and your interest rate is not going to be as good as the higher credit score, more down payment person. It still is beneficial to have a higher credit score, more down payment. You just aren't going to get as much of a benefit.
Right.
Yeah, so that's what that is. It's not that, why are they doing this, this, that, and the other thing? Why are they punishing me? They are kind of punishing you, but they also probably want you to stop buying in this time period and to sit still, because they're trying to slow the economy down. So this also has something to do with it, in my opinion. And they also are,
right.
There's a big push on first-time home buyers. There's a big push on people in certain communities that are lower income communities having the opportunity to purchase homes, which I think is a good thing. But yeah, that's what they're doing. It's not that you're going to have a better interest rate. It's not that you're going to have better pricing. It's not that's not the case. It's just you're not going to get hit as hard as you would have 3 months ago. How's that for an explanation?
Spot on. I think the best analogy.
It's almost like I do this every day.
Yeah. The best analogy, and this is not the actual cost for the interest rate, but for example, if you have a lower credit score, your cost for your rate would have gone from $1.50 to $1.25. But if you had a great credit score, it went from 50 cents to 75 cents. Mm-hmm. You still are getting a better deal. You're still paying less. It's just kind of meeting in the middle more.
Right. Boom. Was that the last topic?
Yeah.
Donovan, we got
that
some
was
comments?
it. I know. I'm sure we got some comments.
Yeah, we can talk about. Can you guys hear me?
Yeah, we can hear you.
Okay.
So, what? Do you have any questions? Because I like when you ask questions, because you're asking from a standpoint of you don't do this every day.
Yeah.
Like you're our social media guy.
Right.
You're not necessarily a mortgage guy, right? You're learning, I'm sure, because
yeah.
you're here. But I like when you ask questions, because sometimes we can be higher level than we think we are, because we're in this every day.
Right.
Do you have any questions on anything we talked about? If you don't, it's fine.
No, I'm actually not today, because I feel like I've learned a lot. We've talked about a few things like once or twice before, so a lot of this stuff is starting to sound a lot familiar to me now. Yeah, for sure.
Well, and I'll tell you this: some of the stuff that we talk about a lot, I'm just ready for it to be out of the news cycle.
Yeah.
But it's staying in the news cycle so long, and I was actually watching a YouTube video on somebody who covers like news and media and so on and so forth. And one of the things that he mentioned was it almost gets boring talking about it, because you have to talk about it so much because this stuff stays in there and it's still relevant, right?
Yeah.
And I was telling Ben, I was like, not everybody watches every one of our podcasts. So like, this is the stuff that's relevant right now. We have to talk about it. We have to talk about the US dollar. We have to talk about the Fed, the Fed chair,
ceiling.
the debt ceiling, the hiking of the interest rates.
Like debt ceiling's June 1st, like less than a month away. Like you'd be crazy not to talk about that right now.
Yeah, you should.
And what's going to happen after it,
Right.
is when they hike it and they increase the debt ceiling, because that's what's going to happen. We'll then talk about whether it was a good or bad decision for the next 2 months.
Right.
So
Pretty much.
yeah. So you're not rooting for other things to happen. It's just, I don't know. It's crazy that this is where we're at.
I mean, it's relevant. I mean, we need to talk about it.
We have to talk
no
about
matter
it.
What, for sure.
We're going to start adding some other stuff in, like, benefits of being a first-time home buyer, even in this economy, things of that nature. And we'll start having a couple other segments. And then the other thing we do is we answer questions or comments off of our social media.
Yeah.
But that's my favorite part of the show.
Or the last podcast, or maybe like 2 podcasts ago, you talked about corporatism.
Yeah, I love it. Just kidding.
Well, I mean, there were some people who actually they kind of disagree with you. They somebody said it was a good thing because they can like businesses consume from it and we need it essentially. You know, somebody said America's very quickly losing its place as the #1 world power. Do you agree?
No.
Right.
Kind of mentioned that earlier with the dollar.
Yeah,
I thought it was kind of cool. I was like, wait, he just talked about this, but yeah.
Yeah, no. America is not going to lose its place as #1 world power. Not anytime soon. Can it happen? Yes. It would happen internally before somebody replaces us, meaning we screw up internally. The gross domestic product is the highest. It's we're #1 in the world, right, for GDP, by far.
By far, still.
Yeah.
The gap's shrunk, but it's still by far.
And it's shrunk because we've allowed it to shrink.
Yeah.
Because as soon as we want to, we'll pass policy to make it more beneficial for our businesses to come home, because those businesses propping up other GDPs, other countries, those are American businesses. Let's not forget that. Like, we trade amongst the whole world, but the best businesses in the world are American made. That's why we are the greatest country in the world, because of our business. Now, GDP is high. We have the most powerful military. We have technology that we don't even know about yet. But we have it. I would put us up, because in order to replace us, there's going to have to be a war first, which we don't want. But do you think America's going down without a war?
No, we're definitely not going down without a fight.
No.
That's for sure.
Right. And we don't want that. We want to just keep winning from a business standpoint, because GDP, as long as it stays high, you're not going to replace us. But yeah, we're the most powerful military. Now, does that mean we can beat everybody in war? No, not necessarily. But, you know, you never know. You get a crazy enough president, and then Hiroshima happens. So, yeah, I mean, seriously, like that. And that's the fear. Like, that's the fear today with this whole Russia-Ukraine thing. And now it comes out that America's involved and so on and so forth. You fear a nuclear war, because that ends the world. Maybe. I think the first person does it. Maybe there's a second, but I don't think that we're crazy enough to end the world, but you never know, right? So, to answer the question, no, our GDP is too high to replace us as a world power. As soon as we wanted to, we could pull the plug on China and their economy goes away. Imagine if Americans stopped buying Chinese products. I mean,
wild.
we literally are China's economy. Like, Americans are consumers. Consumerism's a thing. Now, the Chinese have a big economy because they have a big population on their own, but their average age of population, I think, is 56. So they're all going to be dead in a few years. That's the truth. Like, it's a sad state of the world, but like, we all die at some point. What's the average age of life? 76 for a male, 78 for a female. So they got about 20 years left of most of them being alive. So when that happens, they have a massive population drop off. Where are they getting their money from? Who's consuming their product? It's us, baby. The red, white, and blue.
So someone said corporatism is a natural result of capitalism. And then somebody commented and said, which is good, but then they commented back and said, the government is supposed to control corporations, not vice versa. Giving control to corporations invites abuse and corruption.
Agreed. With the abuse and corruption. You go first, I'll go second on this one.
Yeah. So, I mean, I think, yes, just because you support businesses and capitalism doesn't necessarily mean you support corporatism. Like, there's a big difference, because a business should not be controlling the government, and the government should not be controlling the business. It is there for checks and balances. It is there to kind of, we say it before, laissez-faire, guiding hand. It is there to kind of just make things sure that things are moving along. It is not there to set all these strict regulations to basically micromanage, each other. That goes both ways, in my opinion.
So, does capitalism cause corporatism? No. Corruption causes corporatism. People with low moral character, people who are afraid of competition, executives that are afraid of change, executives who want things to stay the same or to bend the rules to benefit themselves. That's not capitalism. Capitalism capitalism in its essence is a pure form of trade. Bartering was the first form of capitalism. So you can't say that capitalism causes corporatism. You can say that somebody who's afraid of competition, who doesn't want other people in the market who are doing the same thing, who might do it better, maybe they don't have, like, corporations are meant to die eventually. They aren't. Right. They aren't meant to stay around forever. They really aren't. There's supposed to be another business that steps up and replaces them. So I don't believe that capitalism causes corporatism. I believe that corporatism is the side effect of corrupt business practices that in its purest form I do not believe in. The other piece was, what was the second part of that comment?
With the abuse and corruption.
Turn it up, I can't hear you.
I'm sorry. With the abuse and corruption, or
yeah, read the second half.
So one said the government is supposed to control corporations, not vice versa. Giving control to corporations invites abuse and power.
So here's the deal:
and for example, they said, i.e., what Shell did in Nigeria.
Can you look that up?
I'll check it out in a second. Go ahead.
So as far as government's supposed to control corporations, I don't agree with that either. So I think this is a multiple step comment, and I think the conversation's good, and I want people to keep having conversations like that. My opinion is the government is supposed to put some regulation in, small government
To prevent corruption.
But how do you prevent corruption when you're corrupt yourself? The whole idea of government is corrupt, right? The whole idea of government to me is corrupt. Now, the reason I say that is because what is government there for? Government is there to hopefully protect the people, right? But nowadays, as the government grows too much, it's there to control people. They try to control corporations. Corporations realize that that's a corrupt practice of government, and if they're doing corrupt practices as far as too much influence or control over certain businesses, too much regulation over certain businesses, then they can, guess what? That's a corrupt individual in the government. I probably can pay that individual off, and I'm going to do it through lobbyists, and I'm going to do it through shell organizations that call themselves PACs that now pay for the government officials' campaign. And if you pay for enough government officials' campaigns, guess what happens? You are able to influence what the policy being passed is. So it is one of those. It's one of those things where, yes, corporatism is there, but corporatism isn't there because of capitalism. Corporatism is there because of corrupt government trying to create too much control, and the corporations who are afraid of competition, which is a bad business practice in itself, are paying the government officials to pass bills that are beneficial to them and to keep. They are actually paying to pass regulations to make it harder to enter into their markets.
I mean, someone said they should invest in policies to better their business, but you've been saying that too before.
Forever,
right?
Yeah, so the government. Or the businesses, that I need clarification on that.
Because he said government should not control corporations. The way they do this is they can invest in policy. This is what they say, in policy to better their business.
Invest into corporate policy or into government policy, right? So that's the confusion I have on that. So let me address both sides. So a corporation should not invest into government to push policy to benefit their business.
Lobbyism.
That's lobbyism. That's what's caused corporatism. Now, what they should do is they should invest into policy and technologies to bring something positive to the market from a corporate standpoint or from a business standpoint, so that their business goes on and survives and is a great business, right? That to me is a lot more beneficial than that's more benefit. That's the point of business, is you have a product or a service that people are willing to pay for, and they're going to be willing to pay for it as long as it's a great service. Let's use our country club as an example. Seriously, River Hills Country Club. We joined the country club because we like to golf, and we pay some money, initiation fee,
yes,
and we pay a monthly fee. And we will continue to pay the fee as long as the product or the service is good. But because the product and the service has slipped immensely, which is the golf course,
Yep.
there's a chance that a lot of people stop paying that fee.
Vote with your feet.
Vote with your wallet in that sense, right?
Yeah, same. Yeah.
So you're going to stop paying it. So you pay for a service if it's good. So people will go and they will pay for our mortgage services. They will pay for financial advisors. They will pay for the truck. They will pay for the car. They will pay for a product or a service that is good. The number one way to stay in the market should be by bettering your product and bettering your service over time. The corporations that are paying for government regulation to stop new entrants aren't necessarily having to live up to that because they're stopping competition from coming into the market.
And you said competition breeds sufficiency. That's something that you said.
It does.
Competition breeds winners.
Efficiency, winners, success, like competition does that. Like, let's use the concept of a sports team. We like if you played a sport, you had to try out for the team. If you were in band, a lot of times you had to try out for band. If there was somebody who played the trumpet that was better than you, they would make it, but that would force you to go back and practice more, or be more prepared, or be better. Like
That's why we have the Super Bowl, right?
Right. Competition. See who the best team is. That's why at the beginning of a football season, people try out for those teams, and only 53 people make an NFL roster. It's going to be the best 53. That's competition.
I mean, just look at mail. Back when you had just the USPS, like it was a nightmare. Like it took forever. I mean, yeah, they're still not great.
It's a government-run organization.
But then you have then you have private companies come out, and multiple ones like UPS, FedEx. I mean, a bunch of them.
Those are the only ones I know of.
I mean, there's DHL, right? There's some other ones, but but I mean, they come out, and guess what? Now all of a sudden, you're mailing things; they're getting there next day. And then you have Amazon building out for their own specific company, getting it to you within hours.
Well, and then
potentially,
once the drones are allowed to do it, they'll drop it off within an hour.
But what's the reason for that? It's because of competition. Like if it was still just with the USPS delivering absolutely everything, like we'd still be waiting on things for weeks.
The problem is Amazon's gotten so good, and they've actually practiced the concept of getting good, that it's going to be hard to ever break into that market.
Yeah.
But the other thing that happens too is the corporations, they kind of, they'll just buy out the smaller companies. And when they cut you a $500 million check, it's hard to say no.
We just talked about the bank collapsing. Chase bought them already.
Yeah.
Like,
the big banks are going to buy. That was a comment too that I commented on. Somebody said, well, they're just going to encourage the big banks to buy the small ones. And my response back on that comment on our video was, well, that's bad for the consumer. When there's less options, it's bad for the consumer. So, crazy.
I'm thinking about it, but yeah.
Do you agree with that? If there's less options?
Yeah, when you think about it, because then you don't have a choice.
Exactly.
Well, and that's why there's anti-monopoly laws. That is a good form of regulation by the government, meaning there can't be one business that buys up all the rest of the businesses, and the government's actually allowed to come in and break up certain businesses because of monopoly laws.
Yeah, especially being in the South, I feel like we see it a lot, because then we have like smaller like grocery stores and things like that too. So having just one specific thing to go to, or I guess be a part of it does suck when you don't have any competition.
Have you ever heard that saying, variety's the spice of life?
No, but just now I have, yeah.
Great. It's a great
But
saying.
I mean, it makes sense, of course. Yeah.
I mean, who wants to do the same thing over and over and over? Like, I go to Earth Fair, but I also go to Harris Teeter, but I also sometimes go to Publix.
Right.
And each one has different options.
It's like different airlines. I mean, you got to get to the same place, but different people.
Gas stations. You look at gas stations, you have one out there in the middle of nowhere, it's going to be high because your other options drive 10 miles down the road, or pay the more right there,
or if it's right off the highway.
Right. I mean, there's other factors.
Because you're less likely to travel farther down. You're just going to pay for that right there. So
exactly. But then you have an intersection where there's 3 gas stations all in that one intersection. They're going to be more competitively priced because of that. And not on top of that, I mean, they're going to give better service because they are trying to win that business any way they can.
Hypothetically.
But but I mean, they're going to be incentivized to do that. And then that's what more companies do. I mean, it goes from price to service.
But there's another thing too, right? So there's also the bad service, low price section of business, Walmart.
Right.
Like you can go to Walmart, not trying to knock Walmart, but Walmart's whole thing was they cost less money.
Right.
But you also go to there's a big difference between walking into a Gucci store and walking into Walmart, right? Like you walk into the Gucci store, hi, can I help you? Like what do you need? That's that high price, high level, high product.
Even going into Target is a completely different thing.
Yeah.
I didn't, somebody made a comment one day and said, like, you don't even hear people in Target. I never thought about it, but you really don't hear a lot of people in Target.
No.
Everyone's pretty quiet, like shopping and things like that. But if you go to Walmart, it's like wild. A combination of noises. From the carts to the people to the cashiers, it's just a lot.
Right. It's a different level, but Target's also more expensive than Walmart.
I mean, it makes sense.
Right.
Right.
So, but not everybody's going to be shopping in the same segment of category. So
correct. That's how they differentiate themselves, but different market. Any more comments?
They were good. I mean, the capitalism one was pretty good. I think it was. Yeah, we covered everything pretty much. So yeah, we're good to go.
Yeah. That's awesome. Great comments. Keep bringing us the comments. If you have not done it yet, go ahead and bang the red subscribe button. Turn on your notifications. Go to all of our social media. Follow us. We're NBI Financial Group on all of them. But if you subscribe to our YouTube channel, NBI Financial Group, and turn on the notifications and leave a comment, you will be entered into a contest to win either $1,000 cash or Bitcoin. After your comment, you have to have your Instagram handle, and it can't just be like, oh, great video. It has to be a thought out response. If you do that on multiple videos, each video that you do that on, you will have one extra entry into the opportunity to win $1,000. The giveaway is on September 1st. Thank you all for joining us. This is the Loan Guys Podcast, brought to you by NBI Financial Group LLC, your premier mortgage broker. We're out.